The following is an update and technical analysis on Qualcomm, a company of the technology sector and semiconductor space based upon the monthly interval, the much larger picture to the entire buyer and seller data spanning big back since the early 90s here, since its inception. And we had some big headlines rock the company space where giants completely collide. Qualcomm now stands at the edge of a complete seismic shift, a potential takeover of Intel, the former crown jewel of the semiconductor space, but beneath the surface, the risks are monumental. Regulatory storms loom, threatening to derail the deal, while mountains of debt could burden Qualcomm, exposing it at the same time in confluence of a volatile macroeconomic landscape where the clash of cultures, the race against emerging technologies, and geopolitical tensions completely will put tightening grip on the price action of this stock, where this isn't just a merger, but a high-stakes gamble that could either reshape the entire future or completely unravel it. The question remains, will Qualcomm rise to dominance or fall under the weight of ambition? We are trading amongst the 50-monthly moving average, and where you could make the bullish case of a potential cup and handle bullish formation pattern on a complete big move to the upside, ultimately re-challenging its former major reactionary highs up above, blasting beyond the 236, 237 range, ultimately expanding into epic escape velocity. And now zooming in within the daily interval underneath the hood, there is a potential head and shoulder classic looking top, great risk reward short trade setup to the downside, especially if the markets may have not figured out the bold move lying within the storm of uncertainty. Once again, regulator watchdogs are circling, just ready to strike any short sellers where the weight of debt threatens to drag Qualcomm down, just as rivals surge ahead and the risk of internal chaos grows within board members. This isn't just a deal, but a dangerous gamble with a huge volume at price profile around this key range, where the vast majority of the masses have continued to pile in and buy around this key range. Call it the 170 handle, with now a confirmed puncturing of an undercut of the 50-day moving average in the 200 days, marking a confirmed death cross bearish continuation pattern with a massive volume spike hitting the 30 million handle. You have the price percent oscillator retesting its zero line threshold resistance and a 49 print at the Wilder's RSI handle. These are some key structural technical levels that I see within this range, offering in which we would call an aggressive risk reward short trade setup to the downside. Within the beginning process of scaling in, this is big key technical resistance with major reactionary highs really across that entire sphere, with additional reactionary lows, cuts right through a gap, and you get the picture. Just massive reaction that has continued to construct amongst this region. Short sellers, they want to begin scaling in short, and an additional potential retest of the 175 handle for an additional entry, if not an add-on to your existing short trade position for the first target at that 157.85 range for close to a double-digit crash. Call it a 9.4% crash to the downside. And I will continue to add some key additional levels if we take out the 157.85 price support level, with major reaction really across that entire span of time since the early inception of 2024. Long traders, bull traders that want to hold this key 157 level really at all costs to avoid further breakdown and the damaging of the technical momentum indicators within the momentum space. Ultimately, what you would call the neckline to the head and shoulder classic looking top here, which could begin a very bearish tilt in solidifying a complete catastrophe and an all-out panic with volatility down below, ultimately replicating some of the minor air pockets down below. On an unchecked and unfilled gap down to the 111 handle, make no mistake about it, unfilled gaps are the scars of the market, reminders of where fear and greed overpowered logic. They stand as the silent testament to momentum's true force, defying the pull of normalcy and rewriting the rules of price action.